All right, let's take a breath. Because if you spent any time on crypto Twitter over the last 72 hours, you'd think Bitcoin was either A, going to zero, or B, about to be nationalized, tokenized, regulated, deregulated, re-regulated, and then listed on the NYSE by Friday. So, totally normal weekend. Markets are choppy, macro is loud, tariffs are back in the headlines, gold is acting like it knows something, and the Clarity Act, still not clear. Irony, fully intact. If you're feeling confused, frustrated, or just tired of the constant "this is it" energy, congratulations, you're paying attention. This is SENB Daily Brief, and today we're doing a full show. We'll break down what actually happened in the markets, why Bitcoin dipping isn't the same thing as Bitcoin breaking, why the Clarity Act delays matter more than the hot takes, and what this regulatory tug of war could mean for projects, builders, and creators going forward. And later in the show, after the mailbag, we'll do a quick SENB project update, including why there was no show yesterday and what we're actually doing on the ground as Sundance kicks off this week. No jinxing, no overpromising, just context. So, if the charts have you uneasy, the headlines have you spinning, or you just want someone to translate the noise into something usable, you're in the right place. Let's get into the market recap.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's start with the scoreboard, and then we'll zoom out. Overall, the market has pulled back over the last few sessions. Total crypto market cap is sitting in the $3.2 to $3.3 trillion range, down roughly 1 to 2% from last week's highs. This isn't panic selling. This is risk coming off the table. The Fear and Greed Index is at 42, solidly neutral. That lines up with what we're seeing. Less leverage, less chasing, more caution. No euphoria, no capitulation, just chop. Bitcoin has erased a chunk of last week's gains and spent time in the low 90Ks, briefly dipping under key psychological levels before stabilizing. We'll go deeper into why in the news segment because this move wasn't technical. It was macro-driven. For now, the important part, BTC is still holding major higher time frame structure even if short-term momentum has cooled. More on that in a minute. Ethereum has been weaker than Bitcoin on this pullback, sliding toward the low $3,200. That's typical in risk-off environments. ETH tends to feel it more when liquidity tightens. That said, network fundamentals remain strong, and this move looks more like rotation and de-risking than a structural breakdown. Solana has also pulled back, trading in the $120 range to $130 range after its recent run. Volume is still there, meme activity hasn't disappeared, but price action is clearly respecting the broader market mood. Less speculation, more caution. Nothing dramatic, just gravity doing its thing. XRP continues to consolidate below $2, holding its range but not pushing higher yet. There's a reason XRP stays relevant even on quiet days, and today, that reason shows up in the news, not the chart. We'll come back to it shortly. Under the hood, this pullback has hit alts harder than majors. GameFi, DePIN, and higher beta sectors have taken the brunt of the move, while BTC dominance has crept higher, now around 59%. That tells us this isn't fear, it's selectivity. Capital isn't leaving crypto, it's moving more carefully. So the short version? The market didn't break, it exhaled. But the reason for that exhale and why it happened now has very little to do with crypto itself. Let's get into the news, because the real driver here isn't on the chart, it's in the headlines. That's coming up after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, this is where the story actually starts. Because what moved markets over the last few days wasn't crypto news. It was macro stress bleeding into crypto. Let's break it down. The dominant catalyst has been renewed tariff threats from President Trump, aimed at European nations tied to the Greenland dispute. We're talking 10 to 25% proposed tariffs, and markets reacted exactly how you'd expect. Equities pulled back, bonds caught a bid, gold ripped to fresh all-time highs. Risk assets, including crypto, took the hit. This is textbook risk-off behavior. When trade war language enters the chat, liquidity doesn't argue, it steps back. Bitcoin sold off 5 to 6%, briefly dipping under $90,000 before stabilizing in the low $90,000. Important context here. This was not a breakdown driven by crypto-specific weakness. It was macro contagion. Short liquidation spiked. On-chain buyers showed up lower. ETF flows turned mixed. Options markets are now pricing a non-zero chance of deeper downside later this year. But that's volatility hedging, not prophecy. Bitcoin didn't fail. It reacted. As usual, Ethereum and alt absorbed more damage. Ethereum slipped toward $3,200, while higher beta sectors, especially GameFi and DePIN, led losses. That's rotation, not collapse. When uncertainty rises, capital hides in the deepest liquidity pools first. Everything else waits its turn. XRP hovered below $2, relatively calm compared to some other moves, and that's not accidental, because while price cooled, regulatory positioning matters here, and XRP sits right at the intersection of today's next story. Which brings us to the Clarity Act, still delayed, still divisive. Despite yesterday's online meltdowns, there is no new movement on the Clarity Act. The Senate markup remains delayed. Late January is still the hope, not the schedule. Supporters say it's progress. Critics say it's a bank-friendly trap. Everyone agrees it's unfinished. And that unresolved tension is why this bill keeps resurfacing, not because it moved, but because what's at stake is massive. We'll go much deeper on that in today's deep dive. While crypto Twitter argues in circles, TradFi keeps shipping. The NYSE announced preparations for a blockchain-based platform enabling 24/7 trading of tokenized securities. No hype, no memes, just infrastructure. This is what long-term adoption actually looks like. Boring, incremental, and inevitable. So, let's zoom out. Crypto didn't crash, it didn't break, it reacted to macro uncertainty. Tariffs spooked markets, capital de-risked, and regulation, once again, became the lightning rod for everyone's emotions. But none of that changes the underlying trajectory. Now, instead of screaming about it, let's slow this down and actually understand the policy fight behind the noise. Up next, today's deep dive, the Clarity Act, the delays, the drama, and what it really means for crypto going forward. Stay with me.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's switch things up a bit. Because if you've been on X over the last few days, you'd think the Clarity Act either saved crypto, killed crypto, or personally insulted someone's favorite bag. None of that is true. So today, we're going to do something radical. We're going to slow down and actually understand what's happening. The Digital Asset Market Clarity Act, or just the Clarity Act, was introduced in May 2025 to address one core problem. The United States has been regulating crypto after the fact through lawsuits instead of through rules. Think Coinbase, think Ripple, think years of uncertainty where no one knows which regulator shows up until it's too late. This bill is an attempt to end that. Not perfectly, not cleanly, but intentionally. At its core, the Clarity Act tries to draw lines. What is a security? What is a commodity? Who regulates what? And under what conditions? Bitcoin and Ethereum, largely treated as commodities. Other tokens, potentially eligible for non-ancillary status if they're sufficiently decentralized, including ETF-listed assets by 2026. That's why XRP, SOL, and others keep getting mentioned. This isn't favoritism, it's classification. Now here's where the internet caught fire. The bill includes provisions that restrict stablecoin yield on idle balances, limit tokenized equities, add surveillance hooks for national security, shift some power away from state regulators. Translation? Banks like parts of it. DeFi hates parts of it. Builders are nervous. Lobbyists are loud. And everyone thinks their concern is the most important one. So, why is the bill delayed right now? Let's find out. As of today, January 20th, the Clarity Act is not dead. But it is stalled. The Senate markup, originally scheduled for January 15th, was postponed because there are over 130 amendments still being negotiated. That's not chaos. That's politics. To pass the Senate, this bill needs 60 votes, which means bipartisan compromise. And compromise takes time. Supporters argue that imperfect clarity is better than endless enforcement. Markets need predictable rules. Innovation won't stay in the U.S. without guardrails. That includes many Senate Republicans, parts of the industry, and firms like Kraken. For them, this bill is about unlocking institutional capital and reducing regulatory roulette. The opposition isn't irrational either. Coinbase pulled support, arguing the bill favors banks, limits stablecoin rewards, risks freezing DeFi innovation. State regulators worry about losing enforcement authority. Privacy advocates worry about surveillance creep. Some builders fear the rules freeze incumbents in place. These are real concerns, not FUD. Here's the grounded reality. If the bill passes with revisions, it likely brings long-term upside for majors, institutions, and compliant platforms. If it stalls or fails, crypto continues operating in a gray zone, volatile, innovative, and chaotic. Neither outcome is the end of the world, but pretending this is a binary good versus evil story is how people lose perspective and money. For projects like SENB, which is media-first, community-driven, and creator-oriented, clarity isn't about pump narratives. It's about knowing the rules of the road. And right now, that road is under construction. So instead of panicking, we watch the amendments, we listen to who compromises, and we pay attention to what actually changes, not what trends. Up next, we're going to bring this back to the community, because while lawmakers argue, crypto Twitter has opinions. Let's open today's Proof of Thought mailbag. Reading them all next. Stay with me.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, it's time. Because when lawmakers hesitate, crypto Twitter absolutely does not. Let's open the Proof of Thought mailbag, where confidence is high, context is optional, and everyone is somehow an expert. First up, someone with a question and comment rolled into one. Clarity Act delayed? Bullish. They're scared. Yes, clearly. Nothing terrifies Congress more than doing their job slowly. Delays aren't fear. They're votes being counted. Okay, next one reads, this bill is a bank takeover. Crypto is dead. Ah, yes, crypto, famously defeated by paperwork. No bill in U.S. history has ever been a clean win for one side. That's not how legislation works. This next one says, if this passes, DeFi is finished. If DeFi can't survive rules, it wasn't decentralized. It was just early. The debate isn't whether DeFi survives. It's what version survives. Oh boy, here comes the XRP hate. Ripple sabotaged crypto. XRP betrayed everyone. Or Ripple did what every large company does. They advocated for their interests. You don't have to like it, but pretending this is personal is how you lose objectivity. Next up, more negativity. This next says, this delay means the bill is dead forever. No, bills die when support evaporates. This one is stalled because too many people care, not because no one does. Big difference. Okay, this one has ideals written all in between the lines. Just let crypto be free. No rules. Ah, yes, the please don't regulate us strategy. Worked great for literally nothing at scale. Markets without rules don't stay free. They get captured. Last one for today, and it reads, I don't care about the bill. Price go up or down. Honestly, respect. But policy shapes liquidity, and liquidity shapes price. Even if you don't want to care, it still cares about you. And that's the thing. Crypto doesn't need more panic. It needs perspective. Because when everyone's yelling, the edge belongs to the calm ones. And that's going to do it for today's Proof of Thought mailbag. As always, we love to read your comments and questions, especially the spicy ones. So please, keep sending them in. You never know when yours will get read live. Okay, when we come back, a little SENB project update. That's next after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. So, before we wrap things up today, I want to take a minute for a SENB project update. Because while timelines on X are busy panicking, we're actually building. And quick note, before anyone screenshots decimals at me, yes, we all know where the price is. I'm not going to read it out loud. I have more dignity than that. It's a mouthful. It sounds ridiculous in text-to-speech. And frankly, I'm too proud to say that many zeros on air. What matters isn't the number. It's the structure underneath it. Holders steady, liquidity intact, organic trading, no artificial hype cycle. This is exactly what early-stage alignment is supposed to look like. Creative update. Ember Vail is in the studio putting the final touches on the next album, Road to Freedom. This isn't a throwaway playlist. It's a narrative project. Music, visuals, and story moving together. That album is part of how SENB evolves beyond charts into culture, identity, and media. And yes, Sundance is happening. That's why there was no show yesterday. Not because anything stalled, but because things are moving offline. We'll be on the ground this weekend, meeting creators, filmmakers, and partners. Not making loud announcements, not jinxing anything, just doing the work. Because SENB was never meant to be just another token. It's a media-first project built around voice, perspective, and participation. And right now, during uncertainty, is when that foundation matters most. All right, that's the project update. After the break, we'll close this out with today's final thought and bring a little sanity back to your timeline. Stay with me.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, before we go, let's talk about the absolute chaos that is X right now. Every chart is a conviction. Every thread is a prophecy. Every account with a cartoon avatar is definitely a macro expert. One candle up, bull run confirmed. One candle down, it's over. Sell everything, touch grass. And somehow, all of that is happening at the same time. But here's the thing most of that noise misses. Markets breathe, builders build, and real projects don't announce every step they take while they're taking it. That's especially true this week. With Sundance around the corner, a lot of what actually matters is happening off timeline, off thread, and off camera for now. Not because it's secret, not because it's hype, but because some things work better when they're allowed to take shape before being shouted about. So if today's market felt choppy, if the feeds felt loud, if it felt like everyone was yelling and nobody was listening, that's your cue to zoom out. Signal beats noise, process beats performance, and patience still beats panic. We'll be back again with a bigger show, more updates, and a clearer picture of what's unfolding on the ground. Until then, stay steady, stay curious, and don't let the loudest voice in the room decide how you feel. This has been the SENB Daily Brief. I'm SENB Hero. We'll see you next time. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, SENB Hero. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit SENBHeroMedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.